Feel okay? Can you guys hear me? All good? Fabulous. Thank you. Um, okay. This, I've got a couple of emails to go through. But this one here, whilst this looks good and it's obviously in a trend, that's clear to see. Where I'm trying to go with this is I wouldn't personally draw the trend line like that. And that's my issue with trend lines is that they are subjective. Whilst that trend line, the upper trend line of that channel, makes it look like it's a good opportunity to get short this. To me, the biggest thing would be looking at the horizontals. Always has been, always will be. 615, you've got 614.50 here, but around that 615 area, there is a bit of horizontal support. I think you've got enough room to probably continue on. Certainly, fundamentally, their currency is getting stronger as the central bank intervened on the 10th last week after they had their trade balance numbers. But then it weakened again this morning over data they had out on the weekend. So there is a bit of a battle going on between the PBOC and market conditions. So there is an opportunity to obviously for us to go short. There's still left on the downside. Trading against this trend is, I would consider, a, a fool's errand for too long. It's certainly not turning around very shortly. So in terms of that setup, I would be looking at horizontal support lines more so than trend lines. And as I said, trend lines can be subjective, and that's a bit of an issue I've got with them, is that you can sort of make them fit your what you like to see, really. Um, and I wouldn't be trading off them. I don't know if you were trading just off that trend line or that channel, but certainly the pressure is to the downside. So then it's looking to see what the market, if the market did this high test bar that you're looking at, is what's that doing? As I said, 615 seems to be a bit of a level. We can see that there, the market hasn't quite got back up to that. See it here, and if we go back in time, we can see it across here how often that level has the market reacts to. So I don't know if there's an opportunity to jump on it right now. Um, as I said, there's a bit of weakness this morning in this in the one after their data on the weekend and last week. So we're getting a bit of a pull up. So obviously your trade setup, even on the 4 hour, would not be, you wouldn't be looking at it now. Yeah. So here's that 4 hour that you're looking at. And the potential trend line along the 4 hour there across this move, we're certainly getting the cyclicity there. I just don't think that that horizontal was as strong as this 615 level, which if we see some selling off that, that's what it be looking at. Certainly the 50 coming under the 200 would indicate that there's more selling to come as well. Get the momentum back up into above the 50 and get a price reacting to that, and then you'd be looking to go short this again. Yeah. Okay, is it all good, mate? Okay, next one is looking at the CAD yen as phase two. Um, Certainly, we're getting this price reaction to. There's a bit of a selling zone around here, or a horizontal zone around here. This has been. You've just tagged the top one there. Fibonacci's fine. That's okay. I like that. RSI divergence, yes, that is clear to see. And so the question is, would you consider this to have a strong horizontal? Um, yeah, so I like all of that, and so now it's just a matter of trading, finding out is there a strong reason for the market to be reacting to that. Notice that I've got this level here, which we can see there's the two highs back here, and a couple of lows over here we can see as well. So there is a horizontal level off that. Um, the one that you've indicated, which is just the high of that move, I don't see that as being all that strong. You could say these ones are there's a bit of a level around here, and I'll show you why. Firstly, I haven't done this one yet, so let's just have a look at that. But we've got the 786 resistance there. The one I did draw before and noticed is if we draw the fib from that larger move, we can see that we've got I think it's a 38, no, it's the 50 fib coming in there. So we can see that 50 fib. So there's certainly a zone here that the market is reacting to. That's that big move. It's come back, and that 50 has been resistance for some time now. In that area, you'd expect to see some selling, and yes, this would be something to look at as a phase two. There's divergence there, and there's that horizontal zone. Trading against the Bank of Japan, though, I think that they're in for. We can see the price action on the dollar yen there. That the BOJ is more than likely in the marketplace at the moment, influencing the price of the yen, and you're trading against that. So that'd be a little tricky, and you wouldn't be risking the house on it. But there certainly is a phase two set up there. Okay. You also asked about the dollar Swiss. As a phase two, again, I've got a larger fib here, or that move from that there. Um, we can see that the 50 is, there's that move on the weekly. We can see that the 50 is a bit of a horizontal level. It happens to come in with a 200 of it. And price pulled up on that. I don't really see any other horizontal level, Fibonacci extension. There is obviously a bit of a level there that we can see. Price closed underneath it on Friday. It's worthwhile having a look at this. Again, you're trading against the US dollar, and it's getting stronger because the likelihood of raising rates in the US is increasing, and the market is running in front of that. Once that happens, which is they're talking June next year, you'd expect the market to reverse. But every time that they come from the bottom of the cycle, the US dollar does run strongly as interest rates start to increase. And then once that is known and in place, then the market does turn. So you're trading against that sentiment and that concept and that historical price action by shorting against the US dollar, and I don't know if that's a great idea, but we certainly have divergence there, and you have a bit of a sell zone similar to the CAD yen. It's just a matter of whether I wouldn't be in it for long. I wouldn't certainly be risking a lot of money on the trade, but technically that's looks to be a reason for shorting it. Yeah. Okay. That's the last of the charts. And I've just got two questions really. First one being ATR, and what the stop loss rules are when you use the ATR. There's different ways and different concepts, but effectively what the ATR is looking at is, you've got the ATR. This is the red line here on a period of 7, as you can see, and you're using the what the ATR, which is now giving us a reading of 66 pips, as your stop. You'd use it from the closing price, okay? Because the concept is that it's not going to do its ATR. It's not going to do the average away from the closing price. So if as you can see, the average is 66 pips, you're not going to be. I wouldn't really use ATR when trading against the trend. I'd use it with the trend. So over here, you're looking at ATR of around 38. Oh, sorry, there's 60 pips, yeah? Looking at 59 pips. So you're not going to be doing 59 pips above that bar, or from the closing price. Yeah, so 59 puts us about there, which only just you'd managed to stay in. Yep. Where how you use it, there's various ways, and there's no clear way which way is better. Some people use the low or the high. Some people use the close. But the concept is that you're not, unless there's obviously a news announcement, you're not going to be moving more than an ATR away from the price if you're going with the trend. Going against the trend, as I said, I wouldn't necessarily use an ATR style stop, because you're trading against the predominant trend, and that could easily take you out. As you can see, that when you're going with the trend, you don't get a full day's bar above the price. Yep. I mean, a full day's bar above the close, a full ATR above the close when you're going with the trend. Going against the trend, then yeah, you can, as you can see in this bar here, or all of these bars, it goes against the trend. So you're not online, but I hope that answers your question. If it doesn't, just send me another email. Some people use a multiple of ATR, so they'll go, they'll risk 1 ATR and they'll target 2 ATR, or they'll risk 1.5 ATR, or they'll risk 2 ATR, and target a multiple of that. How you do it and how you manage it is, I don't have a set of rules around it, if that's what you're asking. I don't really use ATR all that much. I do use it from time to time, but that's if I'm wanting to, decrease my stop. So I'm decreasing the number of pips I'm risking, to get so I can get a decent risk-reward ratio. And in that sense, I do use it from time to time, but it's not something I use a hell of a lot. So I don't have rules around it. If you want to, up to you to develop your own rules. I know we had a gentleman in there in the K2A office who does use ATR, or did use ATR. He's not there anymore, and it's certainly a concept that some people took on board. All right. Finally, Brian's just emailed me saying, based on my comments this morning, would I go through the hourly charts? I'm presuming you're saying because the things are trending or moving, and therefore you might find opportunities in the shorter time frame. But as we can see, let's rearrange this. Put the Kiwi there. So we've got the Antipodes, and we've got the Europeans and the POMs, and then we've got the Loonie and the Yen. With the two middle ones, we can see that are clearly they're trying to do a phase 2, 163 being the on the pound as a very large support resistance line. Historically, looking around 131 as a potential for the euro, but there's no sign of stopping the Aussie or the Kiwi, certainly in the yen and even in the CAD. You can see that we've got very strong buying coming into the CAD, or selling of the loonie, but it's probably buying of the greenback. And even here on the yen, from this, once it got through the 61 or 105 level, there's really only one day of where the sellers had a bit of a win, but otherwise it's closing on its highs every day. Over here, you got the Kiwi, lots of lower lows, nearly every bar is a lower low, and has been for some time. And then the Aussie finally decided to break out of that dead set range it's been in, and got below 92, retested it here over the unemployment data. As I said in my report, we sold that purely because the number was bullshit. Sold it up here at 92, and traded it back down to, there's a Fibonacci there. I'll show you the fib. The fib that it's been reacting to is this one here. I'm pretty sure you've probably all seen it before. And traded it down to the 91, which was just above that fib. Yep. So is there any opportunity on the hourly here? No, I'm not seeing anything worthwhile. There is that support line that I've got in there from the daily. There's a couple of lows here. But that's not a very strong support line. I don't really expect it to hold or hold it for long. 90 cents is a round number, would probably do a better sight of holding it. And then horizontal's only at 89.95, so it's only 5 pips below the nice round number of 90 cents. Is there an opportunity to get short? Not yet. I don't trade on the shorter time frames. I don't really like trading on the shorter time frames on Monday because we're not all the markets in participating. The yen's on holidays. The Europeans are not yet awake, and neither is the North Americans. So I stay away from short-term trading on the Monday. So, is there an opportunity though on something like the pound later on tonight? There might be. We can see this up here and looking for a cycle. You want to be going with the trend, not only the trend of the daily, but the trend of the shorter time frame. And the trend is clearly down. They got their vote on this Friday with probably the weekend, find the results, but 163, if you find a shorting opportunity, or you see the market come up and test that and then reverse, then you might trade a phase one on the hourly away from that. Again, that's going to be hours away, most likely be looking at it tomorrow. Similarly with the euro and that level there at 131, where it stopped for a bit, down here somewhere, up there somewhere. If you find an opportunity, you'll see the hourly do phase one up to there, and then look for an hourly to do a cycle back underneath it and do a phase one down. There's, as I said, Monday mornings is not really a time for short-term trading. It's about managing your longer terms, finding opportunities, and getting ready for the week and doing your review, having had the weekend off of not looking at screens. Would I expect this gap to come back and fill? Yeah, gaps always do. As we can see, this one here on the cable, the low was 77. Let's call it 78. And have we got there? No, but we've got within 1 pip. Gaps always do come back and fill, so I do expect this Aussie gap down to do the same. It'll come back and fill that. Whether it happens today, quite possible, but certainly in the next day or two we'll fill that in, as we knew the pound would. You expect that to happen too. It's got a couple of pips to go, but it'll get there. So there's not much I'm seeing in the alley, and as I said, I don't really want to do it on the Monday. But when you see bars that or daily bars that aren't closing on the highs, is an opportunity in the shorter time frame. Um, and it gets tricky when you want to, trading this on the shorter time frame way out here on the yen. You're so overdone that you'll be waiting or expecting a pullback. Um, but the yen's a beast of itself in that it can just continue to run. But I would be concerned in trying to trade a phase one long on this when the daily is so overcooked. But you look at something like the CAD, it's not yet overcooked, and so there might be an opportunity in the shorter time frame in that. So that's something you'd look at. The Aussie is pretty much overdone as well. So again, shorting on that would be pretty tricky. I prefer to short it off 91 rather than shorting it down here. But yeah, I think that's going to, certainly below 90 cents, maybe even to 85. Other than that, there's you might find opportunities in the crosses. Haven't really had a look at them yet today, but um, things like the Euro crosses, Euro CAD is coming back up to this level here. Be looking for an opportunity to get short. Euro yen has gone. Euro pound messy. Euro kiwi. Well, it's rallying off the back of kiwi weakness. Yeah, I think we're looking at trading that one. Euro Aussie. Well, it still hasn't done its 1600 pip run that it's due. I'm not going to short that there, but you'll certainly be looking for a shorting opportunity at some point. Yeah, pound, I'd probably, it'll be a little tricky this week with the vote. Um, uh, but it's if the vote does come through and they do break away from the UK, you expect the cable to get weaker. If they don't, then you expect it to get stronger. Okay, guys, any other sort of questions? Otherwise, this is a short and sweet one. FOMC today, which is going, it's not today, sorry. FOMC out on the week, there's quite a bit of data later in the week. Pelosi from Canada. Uh, these votes last time there was a bit of dissension about the official bank rate. Still, everybody still wants the asset purchase facility in there. How this fares will be interesting. That's Wednesday night. Also Wednesday night / Thursday morning, the big one is the US, and then Auntie Yellen talks, and then she talks again on later in the evening. You got the Swiss National Bank monetary policy. You got Kuroda speaking, and yeah, there's the Scottish independence vote, and I hear New Zealand is also having their elections this weekend, and if the Labor government gets in, then you expect their currency to continue to fall. Labor governments are never any good for any economy, never have been. That's not an ideological point of view. That's just a fact. Um, okay. Any any other questions? No, you're all good, all quiet. Well, I shall see you on Wednesday morning. And if we have time, Brian, on Wednesday morning, we might have another look at the opportunities on the shorter time frames. But I'm really not going to sort of play around with them on a Monday because I just don't. There's very few reasons to do so. Okay, guys. Thanks for your time, and we'll see you Wednesday. If you need me, drop me an email. Cheers.